Gold and silver prices must rise, or the non-delivery COMEX swamp, there's no other word for it, is going to get drained. Some are predatory.
Fascinating times, Andrew. I want to come back to Russia just for a second here, and I know you've done a lot of research on this new Russian benchmark that will be priced. Can you share your thoughts on the benchmark?
Yeah, really, really important, and not to be underestimated. And I'm sure a lot of the mainstream media would just poo-poo it and say, well, it's a long time away. It's not. From my own research, and we speak to a lot of people close to this market, the quoted benchmark reference, we saw a quoted reference price in an article. I think it mentioned 5,000 rubles per ounce, which was a benchmark that has since been changed to a flexible, more equitable wholesale market exchange rate for the ruble gold. But the 5,000 ruble per gram benchmark, when it was launched, sucked hundreds of tons of physical gold into the Russian central bank's coffers. And it stick saved the ruble. And if you remember, it strengthened it from the initial sanction reaction when it was 121 on the 7th of March to 75 to 1 by the time it was 75 to 1 in February, and it spiked up to 121 on the 7th of March, right? So, but then we saw everyone coming out and talking about, there was Biden came out and he talked about the ruble to ruble statement, how that immediately backfired. And it was gold that made it backfire. Russia had anticipated these sanctions and immediately implemented this discounted oil for gold trade, which drove hundreds of tons of physical gold into Russian central bank coffers. Guess what price? At COMEX-derived prices, turning the ruble into the strongest gold-backed foreign exchange currency, bar none. And that is true now. And since then, while Russia has leveraged sanctions to their own advantage, all the sanctioning countries except the US have been sucked into an ill-conceived, sanction-driven economic death spiral. Out of necessity, we actually expect Europe to kick back against these US-centric sanctions as we head into winter, and people have to make the choice between eating or heating. Now, the proxy and proof of this sanction backfire is right there in the foreign exchange cross. You can't mess with it. This is a global foreign exchange price. They would love it to be rubble, but it's not. So really, when you weigh up the sanctioning, when you weigh up the currencies of the sanctioning countries versus the ruble, you only need to look at the ruble dollar or the ruble gold price at exchange rates. The ruble has strengthened to around 58 to 1 against the dollar. That's a level not seen in 7 years. Now, and we'll look at the current gold price correlations to the ruble in a moment, but directly after this fixed 5,000 ruble per gram price was formally locked in, a panicking paper-centric gold cartel laden with undeliverable short deliverable bets against gold made the connection that paper gold priced in dollars was grossly undervalued. And accordingly, the ruble strengthening so rapidly within just 1 month, Russia's central bank was able to milk gold out of the CME, LBMA ring-fenced paper markets at a far better bilaterally negotiated ruble price, formally benchmarking what was a floating better price for themselves, priced in physical gold with the friendly BRICS countries. Now, this included the Indian gold for oil trade, which has, since sanctions were implemented in March, it's tripled. Smuggling from the world, when you measure the World Gold Council's estimates of 30 tons per month, moving to closer to 90 tons per month, Indian smuggled gold stays off the radar, but it nevertheless sucks out global supply, further tightening the global physical market supply. Now, this brings us to the effect this unlimited offer to purchase bullion priced in dollars imposed on the ring-fenced CME COMEX alliance. Now, currently, this offer, Russian offer to buy, floats at around $20, consistently 20, sometimes 30, but around $20 above the LBMA benchmark price. Why? Because they're sucking this bullion out. However, this unlimited central bank offer to purchase gold is only constrained by what can actually be physically purchased from the global markets and physically delivered to the Russian central bank. So there's obviously a limit to what people want to sell. So this is being flywheeled out of the paper markets, but I can tell you there's a lot. I don't know any physical owner right now that wants to sell their physical gold at these kind of prices, or any silver owner that wants to sell their silver at these current prices. And what's not been factored in by the spec-driven COMEX-centric paper market is that the evaporating supply of bullion backing each unbacked casino chip they bet short, there's nothing there. The bullion underpinning these bets is on a one-way trip out of the COMEX by way of a large EFP flows that we witness every single day and have proven evidence of. So the automated paper-centric structure of the COMEX market, it blinkers the specs to the fundamental drivers and that are really incentivizing the market makers, which is the house, supplying the shorts to the specs to take the long side of each bet. So remember that. The risk lays with the specs when the commercials insiders do finally ring the register, which they will. It will set up a bid-only market that likely forces a series of upside market halts. Now, as we've warned, following US traders being banned from trading foreign exchange over-the-counter gold and silver back in 2013, they were siloed, as you say, to trade inside this casino. So problem with that is that a little advertised CME rule favors the market-making COMEX liquidity providers who, during, as we've talked about this being, we warned about this and drew attention to it, there could be a 5-minute futures market halt and a 3-minute options market halt. But the market makers can still provide liquidity to the over-the-counter markets, and you know what they're doing while those markets are frozen. So this opens up the short speculators to massive unfactored tail risk. And as we've also warned, this potentially exposes naked short sellers to unlimited losses, more than they have bet. And the March 2020 EFP blowup that exposed the market making liquidity providers to hundreds of millions of losses is why they've made sure they are not exposed to another bid-only market. And some pulled out of providing liquidity. The rest have become Basel III NSFR compliant. So insiders, that's the commercials, and even officials exposed to the Basel III compliant over-the-counter markets, where these EFPs land for bid delivery, are making sure they're on the long side of every single naked short speculator held bet. So the drain of bullion under the spec mainstream media dependent radar is unfathomable. And it beggars the question, really, to what extent have the Russia-driven COMEX outflows broken through the CME LBMA ring fence? And where is all this physical gold finally ending up, guys?
Wow, Andrew, that's amazing. What are you seeing there?
Yes, Shane. To sum up where it's going, surplus Russian central bank physical gold, which exceeds what is held by the central bank to maintain this balanced, strong, stable ruble US dollar cross and ruble euro cross, is being exchanged for rubles with China. So this bullion, excess bullion, goes to China, and they pay for it in rubles. It's a win-win for these two allied, two largest global physical gold countries. And it's this condition that has led into last week's Russian finance ministry announcing its plan to create its own international standard competing with the LBMA. And I mean, really estimates vary as to what extent Russia-driven COMEX outflows have broken through already the CME LBMA ring fence, but we've just evidenced the millions of ounces that have exited by way of EFPs. What it does is evidence that global supply is actually becoming very, very tight at current prices. So the Russia-China alliance breach of this CME LBMA ring fence is really the subject that we're really focusing on. And really, since Basel III NSFR compliance in January, it is this COMEX Achilles heel that's being tapped into using their own EFP mechanism. And the irony is that this very same tool to play a paper-to-paper game, batting the COMEX paper into paper over-the-counter markets that could be eternally rolled into 14-day less forwards. We talked about these before, where it was quite legitimate to keep rolling them into never the land. These are the ones that bring down the house now. And EFPs are now being utilized to tap COMEX price gold into a wide open Basel III compliant funnel. And it's just not being realized by anyone, by really speculators. And certainly the market makers know what's happening. And so up until the West drove Russia into backing the ruble with gold, paper to physical alchemy was already well underway. And we talked about this before. I mean, China alone has already accumulated at least 25,000, 30,000 tons of physical gold that's salted amongst its state-held banks. And Russia has only been exchanging, treasuries for gold until they really had no treasuries left. And since the sanction-driven oil for gold trade commenced 6 months ago in March, I think the anniversary of it today, really, at best estimate, including the noted Indian gold arbitrage trade, around probably at least 1,000 tons, over 1,000 tons of gold has likely been alchemized, but not reported, creating a massive shortfall in what the World Gold Council supply-demand estimates assess. Now, bearing in mind, these estimates govern a lot of the algo derivative inputs, which can offset such drivers as a strong dollar index, influence in how that influences over gold futures, etc. Now, if we add in Russian central bank reserves, these two allied central bank holdings dwarf rehypothecated US and Western central bank holdings. Now, this is one of the drivers that is driving the BIS to, and we've talked about this last time, to exit its paper lease swap liabilities. So bottom line, gold and silver prices must rise, or the non-delivery COMEX swamp, there's no other word for it, is going to get drained. And again, how we always say this, we always end with this, the only question remaining is, how much physical do you own?